Good morning and welcome to the Business Standard Morning Show. I'm Diwali Sanyal. It's the 5th of October 2023 and here are the questions we'll be answering today. Will World Cup bring Diwali early for Indian brands? Will Bihar caste survey change political dynamics? Will this RBI policy be a non-event for markets? And what is a government shutdown? Running short of hotel rooms, Ahmedabad is readying community halls to accommodate fans pouring in from all corners of the world to watch the Cricket World Cup. And for big ticket events like India-Pakistan, even hospitals are refurbishing private rooms. Cricket is indeed a religion in India. And for the first time, India will play the solo host for the marquee cricketing event. Just like fans, Indian brands too are raring to make most of this opportunity. So will this global celebration of cricket help brands reach the global audience? We bring you the pitch report.
The year 1987 was a milestone year in the history of world cricket. It marked the first time the World Cup tournament was held outside England. India and Pakistan were the joint hosts. Nearly 40 years later, India stands at the brink of another first in the history of Cricket World Cups. The BCCI is finally hosting the World Cup on its own merits in this edition. The tournament, which is starting today, will see 10 national cricket teams locked in 48 matchups hosted across 12 venues in India. While this is sure to unleash a significant economic boom across various sectors, the World Cup's true monumenting power lies with its broadcast rights as well as with the brand sponsoring the various aspects of the game.
The last World Cup was not played in India. In fact, it was played in England. The 2015 World Cup was played in Australia. Both these were big hits in financial terms also because the largest viewership was in India. 30, 40, 50,000 Indians will travel to the matches in Australia or England, but crores and crores watched it on television. That's where the revenue comes from, for the broadcast rights. So India is providing about 70 to 73% of the eyeballs and also that much for the revenue. And therefore why cricket is also popular as a sport globally or making money globally, because India is supporting, India is propping it up.
In 1987 too, when India's maiden bid to co-host the World Cup had run into funding trouble, the title sponsorship contract had proved to be the lifesaver for BCCI. But the cricketing body has come a long way since then. Thanks to Indian Premier League, between 2008 and 2023, the cost of annualized media rights for BCCI events went up from 820 crore rupees to 4,800 crore rupees, growing at 33% annually. As a result, for the bilateral matches hosted by BCCI, the annualized price for broadcasting went for 681 crore rupees in 2008 to 1,200 crore rupees in 2023. The BCCI made one of its biggest deals when it sold the media rights for its bilateral matches at a whopping 3,800 crore rupees to Star India from 2012 to 2018. It would not be wise to discount emerging OTT players like Jio, however. Jio Cinema's free broadcast of the IPL earlier this year has prompted Disney Plus Hotstar to announce that it will also stream the World Cup matches for free. But data shows that between 2019 and 2022, while Disney Star shelled out more than Rs 6,000 crore every year for broadcasting BCCI and ICC events, its average annual ad revenue was not more than Rs 5,000 crore. Thus, while the World Cup will bring massive viewership, the failure to cash in through subscription fees remains a worry. The ad market for cricket too has shown big promise for broadcasters in 2021-2022. However, there are apprehensions that increased ad spending on cricket content may not continue anymore. In the ICC T20 World Cup last year, 3 out of the top 10 advertisers were startups from the real money gaming sector. The recent change in GST regulation is expected to dampen their spending zeal.
World Cup in terms of the general advertising spends, it will be in the range of 1,200 to 1,300 crores. That is our estimate. If you look at the India ADEX market, rather, it is somewhere in the range of about a 1 lakh crore market. And if you take World Cup at 1,300 crores, and if you add maybe some more incremental growth in terms of digital, and potentially the numbers touching towards 1,400 and 1,500 crores, it is roughly around 1 to 1.5% extra growth in this year, primarily because of World Cup. As far as companies are concerned, so clearly the companies, as I said, Zomato, Jubilant, hotel industry, aviation industry, FMCG industry, Alcobev industry, restaurant industry. I think these are the brands which are expected to see a big uptick in terms of consumption.
However, experts believe that since Brand India is thriving, largely due to the G20 bolstering its geopolitical position, this will enable Indian brands to garner more attention during the World Cup.
We need to look at the narrative in the context of India has suddenly find itself catapulted to a position where every major economy in the world wants to cultivate a friendship with India. Just the World Cup per se may not be, let's say, as marquee an event as, let's say, if India was hosting the Olympics. But the timing, because of geopolitical reasons, because of the importance of BCCI, is such that Indian brands will now have a kind of a louder voice in the global marketplace than before.
The good thing about Indian cricket is that there are always brands looking for rapid outreach and immediate response, aiming to engage with the masses. However, with the entry of OTT platforms and free streaming rights, the broadcast space has now become a double-edged sword for advertisers. Thus, while the World Cup presents an opportunity for advertisers to warm up to the Diwali festival, experts believe it will be interesting to observe how they negotiate this space.
They say nothing captures the Indian imagination like cricket and politics. Well, you know what's hot in cricket today. Let us bring you the latest in politics. Bihar Chief Minister Nitish Kumar released a caste survey recently, rekindling the memories of Mandal days. The ball, experts say, is now in the ruling BJP's court. So what next? Will this caste politics take center stage in the upcoming 2024 elections? Kasturi Akhil finds out.
History, they say, often repeats itself in strange ways. Over 40 years after former Bihar Chief Minister Bindeshwari Prasad Mandal submitted his report on socially and educationally backward classes, triggering a movement in the 1980s, a chief minister from the same state has come out with a caste survey. The fresh survey, conducted in 2022 and released by Chief Minister Nitish Kumar, put Bihar's population at 13.07 crore. Of them, other backward classes and extremely backward classes constitute 63%. It has put the general category to 15.5%. Interestingly, it includes Muslim upper caste too. Scheduled castes account for about 20% of the state's population, and scheduled tribes make up just 1.6%. The fall in ST population can be attributed to creation of a separate state, Jharkhand. The first caste-based census took place in 1931, when Pakistan was also part of the country. Then the OBC population was 52%. But in the later censuses, only religious composition was made public and not the caste breakup. In 1980, the Mandal Commission had pegged the country's OBC population at 52%. National Sample Survey had pegged it at 41% in 2006. The first caste-based census after the 1931 census of India was undertaken by the Congress-led UPA government in 2011. It was called the Socio-Economic and Caste Census, or SECC. However, its findings on caste breakup were not made public. Earlier this year, Congress leader Rahul Gandhi had exhorted the Narendra Modi government to reveal the data of SECC. He had also called for the removal of the 50% cap on SC, ST, OBC reservations. Many believe that this will resurrect the Mandal versus Kamandal standoff that dominated the political discourse in the 1990s. Now, after the Bihar caste survey, opposition parties have renewed their call for a revision in the reservation, saying it should be proportionate to their respective populations. Prime Minister Narendra Modi, meanwhile, has alleged that the opposition was trying to divide the country. The survey, experts believe, may open the door to challenging the 50% ceiling on reservations in jobs and educational institutions. In 1992, a 9-judge bench of the Supreme Court had fixed the 50% ceiling for reservation in the Mandal Commission case. And in November last year, it said that the 10% EWS quota was over and above the 50% quota limit for SC, ST, and OBC categories.
The 50% quota ceiling had come about because of the original idea that reservation should be confined to a minority of seats, those who especially need it. And so in Ambedkar's, Dr. Ambedkar's conception, this was meant to be given to the most marginalized communities, which were the scheduled castes and the scheduled tribes. In his conception, even OBCs were not entitled to reservation. Over time, various other groups have got reservations. And latest with the EWS quota, anyway, we've gone over 50% nationally. And certain states had, through constitutional amendments, already gone over 50%, like Tamil Nadu and Rajasthan. So the 50% ceiling is a little bit of I don't think it's that binding any longer anyway.
And as the election season draws closer, will the Bihar survey put caste at the center stage?
The demand for a nationwide caste census, especially from the opposition, will gather steam. And that will be the principal plank of the opposition parties going into the 2024 Lok Sabha polls. It remains to be seen how the BJP negotiates that space. But since the 1990s, the BJP has played the Mandal and Kamandal politics quite well, wedded it efficiently. If you see, right from the days of former UP Chief Minister Kalyan Singh or Uma Bharti and to Prime Minister Narendra Modi, BJP has had its set of OBC leaders. So I believe caste has been a part of the political narrative, particularly since 1991.
That is unlikely, as you know, because the ruling party would not like to focus on caste differences within the Hindu population. So the discourse there is, we are all Hindus, we are all one. And even though the reality of caste discrimination might stare us in the face, the mainstream discourse would like to deny that there is caste discrimination.
Experts point out if more states decide to ride the wave after Bihar, parties might use caste surveys as a rallying call and to also strategize their candidates. With assembly elections in 4 crucial states in the offing, experts think that it could provide a glimpse of how caste dynamics will play out in general elections next year.
The equity markets, meanwhile, are currently in doldrums. Surging US bond yields are sending global markets into a downturn. All eyes are now on Friday's RBI monetary policy decision. So, can the RBI outcome turn out to be a non-event, or can it deepen the pain for equities? Harshita Singh and Rex Kano find out in this report.
The RBI appointed Monetary Policy Committee is widely expected to maintain the status quo on the repo rate for the fourth consecutive time when it meets this Friday, October 6. The MPC stance will likely be unchanged as experts believe the recent food prices-led spike in CPI inflation has proved to be transient, with the print cooling off to 6.8% in August from the 15-month high of 7.4% in July. While surging global crude oil prices have stoked inflation fears again, weak rural demand back home is expected to keep the central bank focused on supporting growth.
It's unlikely that RBI is going to do too much in this monetary policy, despite a sharp rise in crude oil prices. India's current K-shaped recovery, where high-end consumption remains strong but rural consumption still remains very weak, cannot support significantly higher levels of interest rate movement upwards. Simply on account of weak rural consumption, we have seen also problems in terms of jobs, problems in terms of lower financial savings from households, and hence it is that very reason that India's tightening over the monetary policy has been rather slower in comparison to global tightening that we have seen, especially in the US.
That said, on the last three occasions when the RBI held rates steady between April and August this year, the domestic equity market displayed muted movement. The Nifty, for instance, declined 0.5% on the last two policy outcomes, while it edged 0.2% higher at the very first pause that came in April. Moreover, the average volatility on the Nifty has been less than 1% on all three occasions. This time too, market experts do not expect the policy outcome to evoke any significant reaction on Dalal Street, as investors are currently more focused on the fresh global uncertainty. A new narrative from overseas is emerging that interest rates could be higher for longer, so expectations of any rate cuts need to be pushed to at least Q1 FY25. Recent market volatility is already pricing uncertainty around the rate cut trajectory. Hence, the coming policy will not have any material impact on the markets, said Anil Rego of Right Horizons. Thus, while the RBI is expected to keep monetary stimulus in check by maintaining tight liquidity, the policy outcome is expected to be a non-event for domestic equities, which are currently reacting more to global worries. Today, on October 5, investors will keep an eye on the service PMI data for September and the weekly Nifty options expiry.
He's making plans for an early retirement. Business Standard.
Financial markets across the world had some nervous moments recently amid buzz of the US government shutdown. On September 4, Kevin McCarthy became the first US speaker to be removed from his job. This came just days after he announced the signing of a bill by US President Joe Biden to avert a shutdown of his government. The US and economies across the globe were worried that the government may shut down on October 1, but it has been temporarily averted now. But what is a government shutdown? We explain it for you.
This is a uniquely American phenomenon. Under United States anti-deficiency law, federal agencies cannot spend money without sanction from the US Congress. The lawmakers are supposed to pass 12 different spending bills to fund agencies across the government. So a shutdown happens when the Congress fails to pass the funding legislations signed into law by the president. When no funding legislation is enacted, federal agencies have to stop all non-essential work and will not send paychecks as long as the shutdown lasts. The funding of the US government was supposed to expire on October 1st, the start of the federal fiscal year, so a shutdown would have effectively begun at 12:01 a.m. But in a last-minute deal, Congress managed to avoid a shutdown by passing a stopgap spending bill that will keep the government running for another 45 days. Now, if no funding law is passed, the US government may shut down in mid-November. Millions of US federal workers are expected to face delayed paychecks when the government shuts down, including many of the roughly 2 million military personnel and more than 2 million civilian workers across the nation. Beyond federal workers, a shutdown could have far-reaching effects on government services. People applying for government services like clinical trials, firearm permits, and passports could see delays. According to the US Travel Industry Association, the travel sector could lose $140 million daily in a shutdown. Goldman Sachs has estimated that a shutdown would reduce economic growth by 0.2% every week it lasted, but growth would then bounce back after the government reopens. The US president and members of Congress will continue to work and get paid. However, any members of their staff who are not deemed essential will be furloughed. The judiciary will be able to continue to operate for a limited time using funds derived from court filings, other fees, and other approved funding. The longest government shutdown happened between 2018 and 2019, when then President Trump and congressional Democrats entered a standoff over his demand for funding for a border wall. The disruption lasted 35 days. It is impossible to predict how long a shutdown would last. However, many in the US are bracing for a stoppage that could last weeks. It's the responsibility of the US Congress to fund the government. The House and Senate have to agree to fund the government in some way, and the President has to sign the legislation into law.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The US government has shut down 10 times over the past 40 years. Well, that's all for today. For more news and analysis, please log in to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.